Hey everyone, this is Jerome Love, and I'm here with your Summer 2025 Texas Commercial Real Estate Market Update. All the data that we're going to be providing here, at least most of it, is from Tierra Grande Magazine, which is the official publication for the Texas Real Estate Research Center at Texas A&M University. Now, the theme of this report is that retail is back, and it's back in a big way, not just locally or regionally, but nationally. And now that Trump is in his second term and he's pushing for lower rates, that momentum is just getting started. Contrary to popular belief, yes, online sales and Amazon and sites like that are very big, but it has not killed brick and mortar real estate. Brick and mortar real estate has become the top performing commercial asset class nationwide. And once again, this is according to Tierra Grande. Now, COVID lockdowns and rising rates froze retail construction, leading to a shortage in key growth markets. Retailers are now competing for the remaining space, and rents are up 2% year over year in Q1 2025. Couple that with many bankruptcies with many of the big box retailers, so you have a surplus of space that's come on the market, and those vacancies are being absorbed very quickly. Developers are converting aging centers to residential and mixed use and repositioning them for different types of tenants. Texas has been different, and retail is no exception. So let's talk about Texas. Texas averages 56 square feet of retail space per person versus 36 nationally. Factors include a younger population, lower land costs, and no state income tax, all of which fuels consumer spending. In major metro markets like Houston, Dallas, and Austin, the density holds steady, even in retail space per capita, which fell 4% due to the population growth. Cities like Austin were down 7%, Lubbock down 10%, and they saw an even sharper per capita decline, despite overall inventory growth of 4% statewide. Now, let's talk about the elephant in the room, and that's interest rates. Now, Trump has been very clear that he wants lower interest rates. Now, while the Federal Reserve is technically independent, we all know Trump has had a way of being able to get his agenda pushed, and if I were a betting man, I would say that rates are going to go down. If this happens, retail development could resume in high demand areas, although inflation concerns may still keep many cautious. Cap rates could compress, increasing the value of stabilized retail centers, and lower rates would also help retailers finance expansions or invest in upgrading their physical stores, especially those that are operating under multi-channel models, in-store and e-commerce. So now here's a few predictions and suggestions for investors that are looking to capitalize on these trends. So what should you watch what? My first prediction, retail rents will continue to rise in population-driven metros, especially if rates fall and capital becomes cheaper. Number two, expect more repositioning of older centers and developers converting underperforming retail into residential, healthcare, and experience-based retail. Number three, retailers that embrace an omni-channel sales will dominate, and landlords who support this strategy will win. So here are 4 steps that any commercial real estate investor, in my opinion, should be taking. Number 1, buy stabilized strip centers in growth markets with limited new supply. That's a pretty simple one. Supply and demand. You want to have the supply to meet the demand. Also, you need to identify aging properties with conversion or redevelopment potential. Also, align with multi-channel retailers. They're going to be the ones that's going to span the test of time as we're transitioning in this new digital AI-driven age. Track population trends, not just income. A lot of times people will just look at income and say that's where we want to put our centers, but you really need to look at the population because that's what really drives the demand for retail. Now, with President Trump in office advocating for lower rates and Texas continuing to outpace the nation in retail resilience, the opportunity is now. Brick and mortar isn't just back, it may be the best commercial real estate play of the decade. For more tips on real estate investment and strategies, feel free to DM me, subscribe to this channel, and make sure you share this with a friend. Look forward to it the next time.